Fred, great to be able to catch up with you and speak with you in this forum. Obviously, Bitcoin and cryptocurrencies have gotten so much attention as of late, to the point where a lot of people want to be able to participate. And now, really because of your efforts over the past number of years, the retail investor, the individual investor, family offices really have an opportunity to do so. And of course, we've seen a launch of ETFs as well as your closed-end fund. You were the first. So just describe us a little bit in terms of the difference between a closed-end fund and an ETF.
Thank you, Catherine. And it is so good to see you and be here discussing this with you. Well, you know, people can buy Bitcoin in a various number of ways. First, everybody started where they would have a wallet or buy it on an exchange. And with the disaster of in Canada, of the collapse of Quadriga and Einstein, the idea of holding it on an exchange or holding it in a wallet kind of made people look for a better choice. And that's why we were on our quest to get the first regulated fund. Now, there are closed-end funds which do nothing but buy 100% Bitcoin. And there are now things that are called ETFs that do nothing but buy Bitcoin as well. Now, the two have some very distinct features, and you would own one or the other depending on what your strategy was. So the first one is let's start with an ETF. The best possible rate of return of a Bitcoin ETF is the price of Bitcoin less the expenses and less the leakage of trading and buying Bitcoin. So it's going to be Bitcoin minus 1 or 2% and maybe more. With a closed-end fund, your best possible rate of return is the price of Bitcoin minus the expenses, but plus the accretive nature of something called an at-the-market offering, or the accretive nature of a normal course issuer bid. And now 3iQ's Bitcoin fund has both.
So that's a really important distinction. And it's something, though, that you, I believe, just were able to get through it and pass through the regulators in terms of being a normal course issuer bid. So describe what that really means.
A normal course issuer bids means that when your fund trades at a discount, the fund itself can be the buyer of its units. So if it buys it at a 5 or a 10% discount, all that profit goes to current unit holders. So unit holders end up with more Bitcoin for the same amount, and they get an added rate of return on top of the performance of Bitcoin. So people will buy the fund itself, and people buy it at a discount. So your projected 12-month return is the discount you buy it at plus the accretive nature of a normal course issuer bid. And it starts Monday, March 1st.
And what about the thoughts, though, in terms of when it trades at a premium?
When it trades at a premium, the fund has something called an at-the-market offering. So the fund itself can sell at a premium, and the unit holders get the benefit of that premium. And to give you an example how powerful that is, in January, the 3iQ Bitcoins fund net asset value outperformed Bitcoin by 1.71% in its first month. So when you try and compound those little gains every month, you're going to get a positive return on top of Bitcoin, which is what people are really finding interesting.
At the same time, too, Fred, depending on one's investment style, a closed-end fund is better for some people, or an ETF is, or maybe you do both. So what's the view in terms of long-term versus short-term, and people who want to trade Bitcoin?
Yeah, if you want to trade Bitcoin on a daily basis, you're better off with the ETF, but you have to be very cautious at what price, because the price of Bitcoin is quite volatile. So if you're paying 5% premium for your ETF, even though we know it'll close at the end of the day at net asset value, during the day it'll trade at a premium. The people making the profit on the premium is the professional traders. It's not the current unit holders. However, it will be very liquid, and you'll be able to get in and get out very, very quickly, and you know it ends the day at net asset value. So an ETF is better for the traders. But for anybody who wants to buy and hold, they're better off with a closed-end fund, because you're going to get a rate of return better than Bitcoin. So it's better than holding it in your wallet. And again, that's all the theory and the potential. We hope it always works. It works out that way. But we have all the pieces in place now.
Got it. I just want to go back though to the value of an ETF, and obviously you believe in both products, because you do have a preliminary prospectus for an ETF. But just describe how the calculations, work in terms of the ETF value at the end of the day, the net asset value, and what investors need to know about those movements throughout the day, and that it's the market makers that really capture, I believe, the profit or the upside.
And that's what we were talking about is it's really Bitcoin is so volatile. It can move 5 or 10% in a day and then end at the same place it opened up the day before. So people will be paying a premium during the day because the market makers will sell them at a premium all day long, because they know that they can go and the fund itself will issue them the shares at the end of that day. So they're the ones making the profit. And it's the unit holders that have to be careful on how much of a premium do they really want to pay. And that's really key. And what we're going to see is there's going to be 5 or 6 ETFs in Canada in the near term. And we'll see those 5 or 6, you're going to need to have good experience, good size, but it's not only the management fee, it's the total expenses of the fund. So the bigger the fund or the bigger the fund manager that has digital assets, we believe our costs should be more favorable than our competitors.
Understood. So there are, of course, the fees that investors pay, the expenses. What about the tax aspect of this as well, in terms of how a closed-end fund compares to an ETF?
They're both taxed like they're like securities. So the beauty about Canada and what we did by getting these funds approved is now Canadians can put Bitcoin in an RSP or a TFSA, and you want to shelter your gains because the gains have been extraordinary, which has been, and most people, the generation, coming up behind me, most of their savings are in TFSAs and RSPs. So I think that's really excellent. Other than that, they're taxed as capital gains, just as any other stock is.
Okay. As well, some people are going to be looking at the management fees, which are higher for a closed-end fund, as far as I know, versus the ETFs. How do you explain that?
Well, again, it takes an awful lot more work to run a closed-end fund. As I said, we have to have the expense of getting a normal course issuer bid done, the expense of getting an at-the-market offerings, and the fees that we pay the investment banker. So it is more expensive to run a closed-end fund. But the beauty about having a closed-end fund where we're crossed, all our assets together have crossed over $2 billion, means that as a complex, our costs are much lower than others right now at this point in time.
When we think about closed-end funds as well, where are they today in the marketplace? And investors should know that you have a long history in the investment industry in terms of new products on the buy side. Where are we in terms of closed-end funds?
I think closed-end funds were typically used as income vehicles, and they would set a target yield or preferred share kind of closed-end funds. Preferred share yields of 7%. And if they traded at a discount, the yields that were being distributed were much higher. They'd go up to 8, 9, or 10%. So that was what traditional closed-end funds were used at. But a lot of people have to go back a long time ago where the very first gold funds were closed-end fund, things such as the Central Fund of Canada, which was a closed-end investment corporation that bought gold that way. So closed-end fund is really nicely structured for single commodity purposes, such as Bitcoin or Ether, and any of the others we may introduce at some point in time.
And, Fred, viewers, people should know that the reason why we kind of got to know each other over the past, I don't know, maybe 8 weeks, is because I personally wanted to have exposure to cryptocurrencies and to Bitcoin, and never really kind of went out and got my own wallet of sorts. So this has been a great vehicle for me personally. And obviously, you wanted to start with the closed-end fund, but the ETFs are also very relevant for investors. When I think about the closed-end fund, it just seems as though it's something that I can own and hold for however I want exposure to cryptocurrencies and Bitcoin. Is that the right way to think about it? Like, why did you start with the closed-end fund? Because that's what I'm starting with. So I guess I'm kind of just wondering why and if that was the right approach.
We created the product for people like you, Catherine. You really want exposure. People do get discouraged when they see it trading at a discount. It's not going to take the world very long to realize that they can buy Bitcoin at a 5% discount in Canada, and that discount will disappear. So my words of wisdom to Canadians is right now is be very careful on the discount and the premium. The fund will take care of those discounts and premiums and make them accretive to you, and will return, hopefully greater than Bitcoin rates of return, and diminish any impact of expenses and management fees. But I think what we're looking for is there will be a wide variety of choices, and people will have to analyze those choices and what's best for them over time. And I think, Canadians have been very excited about being invested in this, and we know the rest of the world is watching us very closely.
Yeah, absolutely. Fred, I think we'll leave it there. I mean, I think what's so great about this is that, we're all learning as the industry evolves and more products come out and more types of cryptocurrencies do as well. So we'll continue the conversations going and really just try to educate and inform.